What's up, homies? Welcome to another episode of the Homeys Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And hopefully together we can break down what's happening in this crazy real estate market. We got a good one for you business owners and you self-employed earners. Like, what does it take to qualify for a home? Can I even purchase a home? So we got Angel. He's the expert in this. We're going to ask him a couple questions that's going to break down the process for you. So, Angel, what counts as self-employed?
Yeah, good question. A very important one when, of course, looking at us as at a self-employed earner when qualifying, right? So, of course, you corporate, anyone who files corporate taxes, you guys have LLCs, S corps, and etc. That, of course, all counts as self-employed earners, right? And then the other one is going to be you people who file Schedule Cs and have 1099s. Those as well count as self-employed earners. For what doesn't count though, I know I get that question is like, I get paid cash. What happens if I get paid cash? Mm-hmm. Can I use that as to report on my taxes? You don't count as a regular employee at your company. So if your company paying you cash and they're not giving you a W-2 or something like that, we can't say you work there because it's not reporting right with the W-2 to verify that. And then second, it doesn't count as self-employed if you're not reporting that money in your taxes. So anyone who's filing that Schedule C and that 1099 or corporate taxes, that's what we're looking at.
Absolutely. Can't stress that enough. You want to make sure that you're reporting your income. You're getting paid under the table. There's no way the bank's going to be able to recognize that income. Mm-hmm. Angel, so what does the bank look at when qualifying for a home?
Yeah, so it's going to go back to those taxes, right? And we'll go over to the next question about programs, but it's really basic, actually. It's just going to be, you obviously don't have W-2s, you don't have pay stubs. So what's the bank going to look at when you're qualifying for a home? They're going to be looking at your taxes for the last 2 years, and they're going to, there's a program with the 1-year tax, which I'll go over in the next segment. But what they're going to be looking at that, and along with that, they're going to want to see some type of profit and loss from your business, just showing that you're still making about the same amount of money, or hopefully even more than you did last year, right? They're also going to ask for bank statements just to show, verify that your deposits are, what you're bringing into your business is matching with your profit, your P&L.
Gotcha. And then do you still need like 2 years of tax statements, or is it the same as W-2 earners?
Yeah, so it's like I said, 2 years of taxes. So if you have a Schedule C or you file 1099, that means your taxes have a Schedule C, 2 years of taxes for that. Or if you're corporate, if you have a corporation, then you got your 2 years of your corporation, your K1s, seeing how much that you make on your K1s.
Gotcha. So that's important. You just can't start a business and then file taxes 1 year and think you can qualify for a home. It's not going to work. Correct. So Angel, what programs can a self-employed earner use to qualify for a home?
Yeah, so there's different programs, like there's banks have bank statement programs or profit and loss programs. So those are options for sure. But those do come with higher interest rates and usually qualify for more of a large down payment. So what I'll just go over today is the programs that we always talk about, which are FHA and conventional, right? Mm-hmm. FHA and conventional, you can qualify with self-employed income. That is no problem at all. So for FHAs, kind of what I mentioned, 2 years of your taxes, we're going to review your profit and losses as well and things like that, what I mentioned previously. That's what we're going to be looking at for FHA. And then same as for conventional, there's also a conventional program that allows you to only use 1 year of your taxes, right? So let's say on 1 year of your taxes that you just like this 2020, you reported your income fairly high compared to 2019. The bank would just go off of your 2020 taxes, right? The only thing with that, they are going to ask you to provide a letter from your CPA or tax preparer stating that you have had this business open for at least 5 years.
Gotcha. Okay. Sounds good. So there's going to be options out there. You can stick to the traditional FHA, conventional, or you can use, profit and loss, bank statement programs like Angel mentioned. Yeah. So Angel, what kind of income will the bank look at? Like, do they look at your net? Do they look at gross? What is that?
So this is a common mistake I see from self-employed people, right? Is they always come in and they're telling me on the phone, we're conversating, going over their situation. They say, I make $150,000 a year. I'm like, okay, awesome. And then when they come in and they bring their taxes, that's their gross income, right? And then of course, a beauty of being not a homeowner, but a business owner is you have your write-offs, right? So, but unfortunately, when you're qualifying for a home is kind of a negative thing because we look at your net income, right? So a lot of business owners get that confused. Is they always tell me their gross income, and we don't look at gross income for you W-2 earners. We do look at gross, anyone who's working for a company, but for business owners, it's always going to be that net income, right? For the conventional and FHA programs, the ones that we're going over today. So yeah, that's basically what we look at. We always look at the net income, something very critical when you're going over your taxes, or if you talk to a lender and they ask you how much did you make, you don't tell them your gross income. Always tell them what your net income is, or on your K1s, what did you take home on your K1s? That's what we use.
Gotcha. And then for those of you that don't know the difference between gross income and net income, gross income is essentially the revenue that you generated, right? This doesn't exclude any expenses, just how much money did I make or did I sell, right? And then net income is going to be your gross income minus your expenses, right? And then that's your net income, right? What you take home, right? So, Angel, can you use money from your business accounts to purchase a home?
Yeah, so that's a question I get a lot as well, right? Like, hey, I have most of my money in my business account. Can I use that for purchasing a home? And the answer is, yeah, you definitely can use that for purchasing a home. So what the bank is going to ask, though, is they're going to ask for your CPA, your tax preparer, to put a letter together stating that using the money from your business account will not affect your business, right? So by you using that money, taking it out from your business, it's not going to have a negative impact against your business, or you're not going to be able to pay your expenses, employees, etc., right? So as long as your CPA or tax preparer can verify that, there's going to be no issue with you using your income, or your bank statements from your business.
Okay, that's good. And then one last question that I just wanted to throw in there. So what if you have a business and you want to use your business to purchase real estate? Would you be able to do that?
What do you mean?
So let's just say you have an LLC, and as opposed to purchasing under your name, you're purchasing under the LLC's name.
Yeah, so that's going to be more of those are business loans, which I'm not an expert in, right? At least to my knowledge, I don't know too much about that, right? About purchasing, but I do know it's doable. You could have an LLC and purchase it, but you're going to go through the business loan route and not the for us, we're residential,
Gotcha.
Residential.
Gotcha. Okay, so you're going to be looking at more like portfolio lenders and something like that.
Something like that, yeah.
Gotcha, that makes sense. Okay, well, this should give you a pretty good idea. I just want to give you a quick recap, right? So what counts as self-employed is going to be 1099 earners. It's going to be Schedule C earners. The bank is going to be looking at your net income as opposed to your gross income, right? So what you are taking home after expenses. The bank wants 2 years of tax statement. That's really important. Just like qualifying for a W-2, you want to make sure that you've established a strong business foundation. They don't want a new business because it's not going to be reliable, dependable income. The programs that you can qualify for are the traditional ones, FHA, conventional, but you can also go with profit and loss programs, bank statement programs. And yes, you can absolutely use your business accounts to purchase a home, right? Money that's in those accounts. So Angel, thank you so much for recapping this for us. Is there a tip that you want to give to business owners that are looking to purchase a home?
I would say just talk to your lender, right, and go over your situation. Just because there is different options for you guys. Like I said, like the 1-year tax program might make sense for you guys. Maybe you just with all your deductions, a profit and loss or a bank statement program might work best for you guys. But there's definitely a lot of options for you guys, or there's definitely something you can do, and you can game plan for the future, right, to get qualified for a home loan. It's definitely possible. Absolutely.
So that's a really key takeaway that, hey, you know what? Just get pre-approved now. See how much you qualify now based off of your most recent year of taxes. And then the good thing is that the next year is coming right around the corner. And if you don't qualify for the amount you're looking for, the lender's going to be like, hey, this upcoming year, you need to report more, right? And then once you report more, you're going to qualify for more. So Angel, thank you so much for breaking this down for us. Thank you, homies, for joining us for another podcast. Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel. You know where to find us. At the Luevanos Group, the best real estate team, the best lender that you can find. All right, thank you, homies. I want to wish you all the best. Take care.
Thank you.
Hey homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.